Hi, I'm Milton and welcome to Real News Friday. Another interesting week in real estate in terms of sales, 869 residential sales, up about 11% on the previous week, but we know we are coming off a low. In terms of stock on the market, it's 8,040, still at that sort of 8,000 mark, still down 9.7% of what it was a year ago. So we're still in a similar sort of market. In terms of rentals, it's 592 properties leased last week. That was up about 5.5%. There's 2,496 properties still available, and that's down 12% to where we were 12 months ago. Now, the big topics this week have been rentals, and the other one is interest rates. Now, rentals, it continues to be pressure, and we're hearing about pressure out there through the media. Look, basics are we're getting pretty close to maybe where the rent returns were back in 2014, so we're really only going back to old ground. Inquiry for rentals is still very, very strong. We're seeing that constantly throughout, and that we believe most of that sort of trend will continue for at least another 12 to 18 months. In terms of interest rates, the interest rates announcement of interest rates, or the base rate, going up 0.25% or 25 points as they call it, isn't that significant. It's just something that is occurring. Got to keep in mind it's not that long ago that we were all sitting at around 7% interest. So we've got people locked in at the moment at about 2.29, even down as low as 1.89. So you've got to sort of put it in perspective. Interesting talking to people who are over 60. They all remember the days when it was 17 and 19% and in the early 90s and then part of the 80s. So we're still doing very well in terms of the interest rates, even with the forecasts of interest rate increases. Many of us have benefited from the lower interest rates in the last 12 months, and it would have been unrealistic to expect them to stay where they were. Money is going to become more expensive in the marketplace overseas, etc., so the banks have to borrow money somewhere. Having said that, listening to the banks the other day, one of them announced a profit of $3 billion. So I don't think anyone's going broke at the moment. Again, getting about the interest rates, this is a good time to review where you're at. In terms of if you want to lock interest rates in, having conversation with a couple of people that are saying, should I lock my interest rates in, shouldn't I? I think basics are get back to your brokerage. You can talk to our guys at Plus Loans anytime and compare what's going on out there. You may consider locking half of your mortgage into a fixed term rate just in case you think it may move, and leave the rest to variable. That decision will be to you. If the benefit of locking into a fixed interest rate is that you'll know for a fixed period of time what your repayments will be, and that's the benefit for your cash flow. It's something I've done personally and something I've done for my business over the years. But overall, market's still going along well. Interest rates, like I say, is a discussion. Rents will continue to move forward, I think. And the inquiry is still very strong. So all the best to everyone out there. Look forward to speaking again next week. In the meantime, check out realestateplus.com.au.